Ashwani Bhatia, Managing Director of State Bank of India, joins us, and this is going to bring a lot of smile for the management of State Bank of India. I distinctly remember in Jan, I had used this phrase that who says elephants cannot dance, and State Bank of India, even though it's elephant, it has managed to do that tango this year. Mr. Bhatia, good morning. Thank you for joining us. Mr. Bhatia, the good news does not stop here. Now we understand that State Bank of India is coming out with its mutual fund very soon. That must be very close to your heart because you were managing this franchise a couple of quarters ago.
Absolutely. I think it's a jewel in our crown. And this was a question that you've asked me many times on the channel. When are we going to list? So obviously, for SBI Mutual Fund, it's a special moment. And I also do recall that when you interviewed me when we just hit the number one position in the mutual fund industry, from there we've gone strength on strength, if I may use the word. So our AUM has grown. We've beaten the markets. We have gained market share. And as I speak, we are at about 17%. And as a fund house, the funds that they manage is around 15 lakh crores, which is not a small statement, $200 billion. They are leaders not only on the managed funds, but also on the passives. And the PMS piece, of course, that's a big one. And of course, things that come along the way, for example, Supreme Court asking us to manage the funds for FT, so on and so forth. So that company has done wonderfully, and it's been a fantastic journey. We think as a parent, this is the right time for it to list. For the employees, I think there'll be good value unlocking. They've been with us for many years, and they deserve to be rewarded as well.
So are we looking at FY22 listing or early FY23 listing?
Of course, there is a lot of work to be done in an IPO process, but I don't think FY22 looks likely. FY23 would be the right timing.
I'm not putting words in your mouth, but for FY23 means 16 to 18 months away. So will it be first half of FY23? I mean, is there a conscious attempt?
I would think so, yes.
Okay.
First half of FY23 would be a right assessment.
AMC stocks, unfortunately, Mr. Bhatia, are not really the darlings now. The fear is that equity market share is going to PMS and ETFs. The fee-based income will remain under pressure. And that explains why if I look at some of your peers who've gone public and they are not really commanding that kind of a premium which let's say they were a year ago. Is the fear in the market that mutual funds are losing market share to PMS and other exotic ETFs? Is that true?
So PMS will still be a very small part of the overall asset management piece. Obviously, today there's a lot of discussion on managed funds and also on passives like ETFs and others. So suffice to say that we, SBI Mutual Fund, has been doing well on all, as I've just before. That segment is obviously going to become more active. It's also going to become more diversified. So right from index, you will be seeing some funds that are more specialized. There'll be more exotic stuff coming in. So again, wrong to say that you will not get fee there. You will get volume, but for a few of the sophisticated ones, you will get decent amount of fee as well. And pandemic, of course, has shown the interest of the common man coming in, the number of demat accounts opening. The SIPs have been at record highs. So I would say that the mutual fund industry will be growing far more than the banking industry. And it's very clear, right? Today we are at 37 lakh crores. And if this space continues, very soon, or maybe within the next 10 years, we would be half of the banking industry.
So, can I say that in your assessment as a business manager, as someone who has a deep understanding of the trends in the mutual fund, because you are uh, managing one of the largest AMCs in India, you think that the fear in the market about slowdown in AMC, drop in fee structure, squeeze in margins, that's overdone?
I would think so. So again, I would again come back to what SEBI did, and everybody in the fund houses thought that the changes that were brought about 3 years back were unfriendly. But I think overall, and these are two terms that I always used, right? SLR, safety, liquidity, return, and CRR, consider risk and return. If fund managers follow that, right, I think the sky is the limit. Your AUM will only grow on an incremental basis. Of course, the moment you cross some fund, some schemes say cross 10,000 or 20,000, the fee actually gets down. But actually, the volumes compensate. And I think in India, we are at a very sweet spot. Uh, this year, you're going to grow 9.5%. If you add inflation and so on and so forth, I think, let's not talk about 5 trillion. Within maybe 8 to 9 years, we should be talking about a 10 trillion economy. So look at the volumes that will actually come into the asset management space. That's a decent number.
Good morning, sir. This is Nentara. I just want to pick up from a point that Nikunj was also trying to get at. The IPO, exciting times ahead for us. We're also seeing, if I may say so, early signs of disruption, maybe possible disruption in this space. For example, look at Sachin Bansal's Navi. We've been hearing about these new age companies and how they're trying to rewrite the rules when it comes to AMCs. How are you poised to tackle that?
So again, in fund houses or any company that does asset management, or for that matter, any bank, what matters? Number one, it is the brand name. Number two, the distribution, and number three, the performance. So I think on all those three factors, SBI AMC or SBI Mutual Fund would tick all the boxes. We are today leaders in tier two, tier three. It will also be wrong to say that financial products like these, just slightly sophisticated, can be sold only online. That's not the case. It cannot be sold digitally. There is more nuanced approach as far as investing in funds is concerned as compared to a banking instrument. So obviously, we are seeing a lot of competition. Mr. Bansal's AMC is also one of those. But I guess we'll have to wait and see. Uh, I don't think we should be very bothered on that piece, very frankly. So this is not going to become as easy as a Amazon shopping or Flipkart shopping kind of a thing. No, these products are slightly different.
That's why I wanted to get your views, from a Sachin Bansal to a Nitin Kamath talking about disrupting AMCs. That's why it's great to have you. And when you say that it's not possible to do it online, could SBI Mutual Fund therefore be an outlier in that sense and try to improve penetration offline, going to the smaller towns? Is that it? Is that the game plan?
So SBI Mutual Fund is already a leader in tier 2, tier 3, tier 4. We are already in 99% of the country's PIN codes. So that way our penetration is fantastic. And actually, we in SBI Mutual Fund, when I was there, we used to say that the sun rises in the east. So we get a decent, percentage of our funds from the northeast, the 7 states, West Bengal, Orissa. Those states are doing fantastically. So, and I think this will only grow, as I said earlier. So, what needs to be done from the bank side, of course, is the fact that every branch or every zone needs to track something called the asset management to deposits kind of ratio and all. And we are still very, very low, if you ask me. State Bank, for example, doesn't contribute more than 3.5% of its deposits to the mutual fund. So the sky is the limit. And the customers base is just about 1.2 crores. State Bank has 48 crore customers. So where the potential is.
Indeed. Mr. Bhatia, great to have you once again on the show. Aisha as well joining in. So you've given us a definitive timeline pretty much for the mutual fund listing, which is the first half of FY23. But Yono ki bari kab aayegi?
Yono again is doing very well. And again, we were first off the block. And, Nikunj was saying, what is different with State Bank of India? So obviously, we have done quite a few things. Yono is getting traction. We are getting more hits over there. And clearly, of course, the future, the model is going to be digital plus physical. No questions about that. So we are very happy, and we haven't thought about Yono listing. If it is there, it's going to be a few years away. The financial models, the profitability, and so on and so forth, they have got to be worked on. But for the time being, it isn't on the table as yet. It is just a product for our customers for their convenience. And we are very happy to see the kind of traction that we have seen over the past year or so. So you can buy your mutual funds there, you can do your life insurance there, you can pay your credit card bills. So again, I think we were also the first super app in the market. So we'll develop the product, we will develop and provide as much convenience as a customer needs to ensure that it is a robust product for our customers.
Sure, indeed it is. But Mr. Bhatia, why this long wait? Is it because you're sufficiently funded in terms of growth capex when it comes to Yono, or do you want to take the product to a certain degree before putting it out there for a public listing?
So very frankly, a listing of a Yono was never on the table. And that will have to be thought about. Coming to capital, today we are very well capitalized. This year we have raised a decent amount of AT1 capital. The last round was last week, where we got a very good rate also. So this year we've already done 14,000 crore of AT1. Our credit deposit ratio needs to actually really inch up towards 70-75% for us to actually think about a equity market raise. So right now we are very, very, very comfortable as far as capital is concerned. And I mean, coming back to the initial question, the fact that we are listing AMC doesn't mean that we are looking for capital, very frankly.
Sure, get your point. Mr. Bhatia, such a pleasure speaking with you today. And in case we don't meet before the year ends, here's wishing you and your entire team at SBI a very happy and prosperous 2022, and a healthy one at that from all of us here at ET Now.